Ladies and gentlemen, welcome back to the Finstep Asia Edge podcast, talking about things in Web3, fintech, and all things digital in finance. Today with me is the CEO and co-founder of WealthRyse, Mr. David Lee. We've known each other for a while, and he's been
Very long time.
one of the key players in fintech and wealth tech in Hong Kong. Comes with a very distinguished background. David, welcome to the Finstep Asia Edge podcast. Delighted to have you on.
Well, Mushir, thank you very much for having me, and thank you very much, the subscribers of this channel. You should really subscribe. This is a great channel, and you get to learn more about what's going on. And there's a lot of eloquent and poignant, episodes that need to be consumed and subscribed for. So please click the subscribe button for Mushir. I certainly am, and so is everyone at WealthRyse.
You're very kind, and this is not a paid promotion. It was David being nice to us. David, do you want to introduce the audience to your journey? Right, you've had a distinguished academic profile, then journey in financial services broadly. I would love to hear of your professional journey, and then moving into your entrepreneurial journey in fintech and wealth tech.
Absolutely, Mushir. So I think it's always good to start with the story,
Sure,
right?
go
And
for it,
so
yeah.
my story begins quite a long time ago. So I was born in the States in a place called Oklahoma,
Sure.
which like the musical, it's a very sprawling plains-like Dust Bowl land, and there I grew up, and I stayed there for 12 years. Because of the fact it was a bit remote.
Yeah.
I probably was the only Asian there.
All right. Okay.
Only Korean there, actually. And most of the times I was mistaken for an American Indian, especially when it was the summer months where you had to get really tan.
Sure.
And that was sort of the only other, I guess, similar type of features that people had. So that was a bit interesting.
Okay.
But it always kept to what I think has been one of the pillars of my life, is to try to connect different cultures and different areas of expertise and experience. And of course, lo and behold, after I had grown up there for 12 years, I moved back to Korea because obviously my parents wanted me to learn Korean, and I know how it is with parents. They want you to learn about your culture and sort of where you came from, and it was great, but unfortunately I didn't speak a lick of Korean, and my Korean's not that great anyway, but I was thrown into an all-Korean school, an all-Korean male school, boys' school, which was not very very accommodating. I mean, obviously there was the usual of episodes of trying to be tough enough, and obviously because it's an all-boys school, it was a bit rough and tumble. But I think that really hardened and made me more resilient, because obviously you want to try to succeed and try to survive. And then of course, then to make it harder, my parents sent me back to the States alone to go to college, and then go to college at UCLA, which was great. The scene was great in Westwood, and then of course, like all Asian parents, they want you to be a doctor or a lawyer. And so, I picked law school because it was only 3 years, not 7 years. I was lucky enough to get to Harvard, and I stayed there for 3 years, graduated, and became the traditional Wall Street corporate lawyer. So I had an office facing the Statue of Liberty. I think it was the best office in the whole place, and you had it to yourself. But then, of course, a partner called and said, listen, we like your language skills, we like your background. Can you help us develop an office in Asia? So I said, well, but I want to come back. And so he said, no, don't worry. It's only going to be 6 months. We'll have you back. It's been more than 6 months, as you probably know.
That's what they all say.
That's what they all say. And I'm sure you have your own thing. So I think after that, I came back to Asia. I was in Hong Kong, but I really didn't stay in Hong Kong. I was traveling to Korea, Japan. It was the usual gamut. It was like taking airplanes like they're buses. And we built up the practice. And of course, then I got an itch to get into investment banking, which then I was then scouted by Credit Suisse for the investment banking role. And then they're now UBS. And then, of course, after that, I jumped to the buy side to...
Still tough to absorb that.
Yes, it is. It is.
Now UBS.
Yes, that's true. That's true. And after that, I went over to the buy side to work for the largest Korean PE fund. And then, of course, my primary role was to essentially harvest from the fund, and obviously IPO, exit, trade sale, buyout, leverage buyout, whatever.
Sure.
And then after a while, when we harvested everything, I was able to take a breath because it was a very long journey up to that point, and sort of assess where my life was. And at that point, obviously there were these new startup ideas coming forth. Fintech was a huge thing, and I think that's when we first met, about 6-7 years ago.
Correct.
And I decided to dabble in that. I was able to luckily, meet people that were very helpful. Invested in a fintech company, a couple of fintech companies. Very few. I'm not a rich guy, so I just wanted to make sure that, and obviously help that grow. And I think that we've been successful.
Yeah.
I'm very happy with where we are. And then after a while, I think it became more of a journey that I thought that I needed to take on with respect to what the pain points are in fintech, the way I understood them from the many years that I've was able to experience through many intermediaries, shareholders, investors, yourself. And so that's how I came to be here. And I think generally the overriding factor and sort of the theme of my journey has been more of, and again, I hope it's not self-serving, but just to be honest here, I think for every startup founder, I'm sure if there's a common thread, it's essentially resilience.
I was going to say that, yeah.
And because I think that's the primary ingredient for every founder, whether that person is successful or not. I think that's something that's a common thread, and you being thrown into many different environments, much like yourself. There is that experience that you need to undergo. There is a trial by fire that people need to experience, right? And as a result of it, I've met a lot of wonderful people, fabulous individuals, great people with vision, dreams, aspirations that are extremely honorable and for the societal good. So yeah, it's been very, very gratifying. And up to this point, I think I have no complaints.
That's great to hear. I think resilience is a key element that we see across entrepreneurship. You see it across sports, especially in endurance sports, and it's a lot to do with your mental fortitude and what you're thrown into, right? The proverbial, if they need to swim, throw them in the water conversation that your parents have did to you when you had to go into the all-boys school in Korea. But again, you have had instances where you've been entrepreneurial since the beginning. When your firm sent you over here, you're essentially growing business, and this is again being an entrepreneur, as people try to call it. But I think it's the same kind of focus, right? You're building business, you're treating it as your own, and you're looking to grow. And a place like Hong Kong provides a lot of space to do that. It's not easy. It is, and I think that's one of the quirky things about Hong Kong. If you're you always say, and a lot of people say in startups, you wish you could build something, and if it fails, fail quickly, right? In Hong Kong, it's a situation that happens with quite a few people because the cost of opportunity is very high. In case of you're not doing what you were doing and you take up startups, and secondly, to survive, the cost of running an operations, maintaining yourself, etc., can be extreme. So you really have to be very revenue focused from beforehand, or get backers very early in the journey. Now, what would you say are 2 or 3 things that you've learned through this entrepreneurship journey, in addition to the key to having resilience, right? What would I say? One lesson that you learned, which in your early days, which paid you stead in the latter years, as it were, and secondly is something that you discovered about yourselves beyond the resilience part.
Sure, that's a great question. And just to answer, I think that from my experience, which is not, I'm sure that there are people with more experience than I am, but according to what I think, there are 3 common characteristics that are required to have a chance, and I'm repeating this again, a chance to be successful. Once again, you have to have timing and luck on your side. Some people say it's 80%. Some people say it's 99%. Who knows?
Yeah.
But that's essentially something you cannot control. So if I were you, I would not lose sleep over it.
Yeah.
But the things you can control, there are 3 characteristics that I found that throughout my journeys, including meeting yourself as a very successful founder of this podcast, and obviously other things, share. And the first thing is actually the hungriness of trying to achieve what you want to achieve. So you have to be hungry. You have to just go out there and you have to want to do something. It's not a question of, well, I want to do it because of this. It's just the hunger has to be unexplained. It has to just always come up, and it's like something that just magically appears.
Fair.
In a way. And it cannot be extinguished. I think that's the most important thing. Now, the second thing, which is equally as important, but sometimes people do forget, is humility. And you've always got to realize that despite the fact you may be a unicorn, you may be a decacorn, you may not even be a revenue generating company, there are people that are much higher up the food chain than you are, that will work harder, that are smarter, that are better funded, that know more people. And, and life's not fair. So they may have some unfair edge over you or your company, but you have to be humble and to accept it. Okay? Acceptance is the key. If you try to justify it, if you try to build yourself up, and again, I know marketing is key and you want to really be that sort of wheeler dealer, that's fine, but you have to, at the bottom of your heart, understand that there's so much more to do, so much longer to trek, and you have to put other people first. That is the true meaning of a leader from my perspective, is to take care of those around you, and then you can go ahead and do what you need to do and pursue that vision. And that's, I think, really key. And sometimes as a leader, when you get that first fundraising, maybe you get the first client, you think you're the bomb. But you have to really realize that that's only one client, that's only one fundraise, and you have 20 more to go before people will start thinking of you as the next Elon or the next Jeff, right? And the last thing, which is, I think, the most important, and there's been a lot of terminology used for it, but I think the most important thing is fearlessness.
Yeah.
No matter what you think deep inside when you are at home, just before you go to bed, and you're closing your eyes and sort of imagining all the things that went wrong and all the things that will go wrong tomorrow, which we all do. You have to be fearless, and you have to double down on yourself. No matter what people tell you, no matter what anyone tells you, you have to really be committed to your vision. And believe me, life is going to throw you not just a curveball, but essentially a monkey wrench that will be aimed directly at your face. And you're going to have to take that blow again and again, sometimes multiple times each day, each hour, each minute. And every single time you're going to have to get up. And that, I think, is the most important trait. What you call it, fearlessness, you call it aspiration, you call it courage, you call it bravery, whatever, stupidity, or something like that. I mean, you just have to believe it, and you have to believe in yourself. That's, I think, the main crux of what you need to go, and you really need to be really willing to give up everything and more. And remember what I said before, it is just for a chance to be successful. That doesn't even guarantee you success. So that's, I think, those are three things: humility, hunger, and fearlessness. These are the three things that are a prerequisite, excuse me, I can't speak today, for being, I think, a founder that has a chance for success.
I think you've hit the nail on all three, right? And that goes with your underpinning theme of resilience across that. And to be resilient, you need to work hard, you need to be humble about where you are, you need to have that fearlessness, courage, as it were, and you build up. I'm going to take this opportunity to give to say you should also follow up Neil Tan's podcast, which is on resilience. It's called the Resilience Podcast. Neil is the ex-chairman of the Fintech Association and talks to a lot of founders, so you can delve deeper into that topic. We'll have the link below for you to review it. Coming back to these, so you've had this opportunity of first, working for a corporate, right? Having been in a highly competitive environment, then being the entrepreneur, building the business, and then becoming an entrepreneur yourself. So tell me the journey of transitioning from one to starting another, and the story of WealthRyse.
Sure, absolutely. So I think transitioning from a corporate is essentially trying to, and again, I don't equate or I don't condone caging, any type of living animal, but let's just say you're going from a zoo to going into the jungle, into the wild. And and you get fed 3 times a day, I'm sure, but in the wild you have to essentially, you have to get your own food.
Analogy before,
Yes,
but yeah, it makes sense.
Yes, and it's very, very shocking.
Yeah.
And this is what I think by being fearless and brave is because the fact is that there's going to be a lot of things that you're not going to know and that are going to come at you at lightning speed.
Yeah.
And you just have to be brave and courageous to be able to do that. And I think that most people starting from a corporate to going to a startup, I think the most important thing is to understand and really be convinced of your vision.
Sure.
Without that, I think it's going to be very difficult. If you're going, for instance, well, I have no choice, or, I want to make money. And I know that, and believe me, I've been guilty of the same thing, so I'm not accusing anyone of anything else. But if you do it that way, I think you'll find that the tank the gasoline in your tank is going to be very, very low in a very short amount of time. So I think it's really just important to understand what that vision is. And more importantly, and I wish I could have thought of this and understood this a bit more, is it's not just yourself because you're making the choice, but those that are around you, your loved ones, your family, your friends, your kids, people that rely on you, their lives are also going to be affected. So that's also something that I'm sure people will consider.
Yeah.
But that's also something that I think you just really need to be at peace with, because in the end, it is everything that you have and more to be able to do that. So I think that is, the transition. And again, being filled with hope is great, but you also have to prepare for the worst.
Yeah.
And that's just reality. But that's not to say that if you live or continue in corporate life that somehow it's going to be better or there's something there. Because again, do you really want to be, 60, 70 and sort of play the 3-word game, coulda, woulda, shoulda? Again, that's essentially what you're thinking about, right? So that's, I think, the thing that I would say. Now, in terms of the current company, which, could not have been founded, nor could have it been, on the road to success or even started without, past shareholders being supportive, past partners, past founders that have worked with me, supporting the business. I don't think I would have been anywhere close to where I am without them. So it's just, a multitude of gratitude for those that have supported and are continue to support, including all the people that have worked with up till now, to which they are very successful as well. I think WealthRyse started when I believe that we need to really address a pain point, which again sounds a bit, ordinary. But again, I just want to make sure that, we understand this, is that people work and people make money. But what's the whole point of that? Essentially, it's to ensure the future.
Fair. Yeah.
And let's not talk about wealth or finances at this point. Let's just talk about the future and how people need to be happy in the future. And one of the tenets to happiness is fulfillment, both from a materialistic perspective, not the billions of dollars, but just to be able to provide for yourself and your family. I think that's, the key journey of why we're here. We believe in the fundamental right that people deserve to get some type of guidance in how they live their future. Now, whether they choose to listen to it or not, that's obviously their decision. But at least the access to that should be equalized. And that's the whole point of ESG. And I would argue, in fact, that fintech, and maybe I could be, this could be controversial, but I don't think it is. ESG, for example, and I think that a chairman of a very famous financial group said this as well. ESG, S stands for sustainability.
Yeah.
And that's what's more important in terms of sustainability than your private wealth, than your well-being. And I think that is what we're trying to help. Now, that being said, who are we trying to help? Well, there are a lot of people out there that are very nice people that have a lot of good intent and have good relationships with other people and our ability to advise people. But they don't have the tools to properly do that. And these are financial advisors.
Correct.
Right? And my view is that why can't we help them? And instead of trying to usurp or think that maybe technology is jumping one step ahead of them, help them do this. Now, again, this is not a new paradigm. It's not a new way of thinking. But we have this new thing called artificial intelligence.
Yes.
That has suddenly taken the world by storm.
Not necessarily new Gen AI more so, but
artificial intelligence was what? 1950s. That's
Kind of,
before, way before our time, thankfully.
Yes.
That started, and now it's at this point where there's a critical mass. And what I believe is that the financial advisor has this great relationship, has this ability to persuade people, but he or she needs a product. He or she needs some type of way to transmute that advice into something that is quantitative, that appears to make sense. So, and also that the financial advisor can understand. And you can do this through artificial intelligence and the program and the neural network that we've built at WealthRyse. And that's all we do. I mean, that is our specific pain point. As much as I would love to say we can solve world hunger, cure diseases, all this stuff, I think those are grandiose promises that certainly will require visionary, probably much more visionary than I am. But for me, the most important thing right now, let's start at the basic steps. There are people that want to help people, but they need a tool to help them. And we want to be that tool. We want to be that sales tool to be able to make sure that that person can provide the best advice possible to his or her clients. And we can do that through leveraging artificial intelligence that we've built, that's proprietary, that's based off of a tried and true system that's been scientifically cited, that's being used by various asset managers. And, lo and behold, hopefully a new client that we've already onboarded. And that's sort of where we are right now. And that's the story of WealthRyse. I'll stop there.
No, it's great. Look, I think in most of the world, as wealth increases, as we see more affluence across the emerging world and the global south, as it's coined, right? You are seeing more and more people looking for financial advice because most people are not necessarily very confident of an understanding of the investment landscape, right? And they want somebody qualified to do it. However, the data flow has changed significantly from where it was, and your styles were fairly vanilla even 25, 30 years ago, pre.com. Now you have so much big data analytics coming in. We also saw about a decade ago, or a few years back, the rise of the Robo-Advisors, right, which is more for the retail market, not necessarily for the mass affluent or HNIs or for IFAs. However, success of Robo-Advisors has been mixed at best, I would say. There have been a very handful, if any, who have done really well at scale across the world, not just in this part of the world. How would you differentiate a Robo-Advisor, which is purely, more an artificial intelligence, smart algo advisor for the retail versus how your tool behaves and how it supports IFAs?
All right. Again,
just to kind of distinguish for the audience in terms of how the tools work.
Of course. So I guess more precisely, we're a B2B2C company. So essentially, we don't go directly to the client. Correct. We're not a robo-advisor. And to put it quite simply, we want to empower the advisor. I think the robo-advisor in itself serves a purpose. It's a very simple tool. It's for people that want to just no muss, no fuss. But again, you've got to realize, and I'm going to just take an example here. So generally, I'm just citing some reports here. So according to Bain & Co. in 2020, private wealth is probably about 130 trillion US dollars now. Of that, about 40% is in the emerging mass affluent, lower high net worth, and obviously mass retail. So that's 40%. So that's a pretty big number, probably about 50 trillion US dollars. So of that amount, it's continuously growing. I mean, in Asia, it's growing about a 7.5% per annum clip. So why is it growing? Well, because people need to save. Why are people saving? The most important thing is retirement.
Correct.
So if I have retirement and 20 years later, I need this egg to sustain me when I'm 120 years old, because that's how long we're going to live. I mean, technology is growing by leaps and bounds.
For longevity.
Yes, right. So am I going to, and again, it's nothing to disparage about robo-advice, but am I going to put it into a black box, which it's really not explained to me how it's done? All I know is that it's supposed to be pretty safe. There are no physical branches. If there's a trouble with my account, I have to email or do messaging. Am I going to put all my eggs in that basket? That's on one side. Okay. Now, on the other side, there's a DIY solution. I can go and after work, putting the kids to bed, 9 p.m., I'm exhausted, but I still have to manage my wealth. I go to YouTube, I go to TikTok, watch the videos.
Influencers.
Influencers who say, I have this foolproof or risk-proof plan of
Yeah.
making money off of options trading. Anybody can do it. Again, maybe it's true, maybe it's not. And then you have to sort of figure out how that matches my portfolio. What are these things, and whether they really do make sense for me. And I do this every night for a couple of hours, and I have to go back to work at 6 a.m. or 7 a.m., wherever that is. That's true. You can do that as well. But what we're trying to do is, what about the middle part? What about all these financial advisors? There's a couple of 100,000 of them registered throughout Asia, not including China, and they are able to do this. It's their fiduciary duty to help you. Correct. But the point is that they just don't have the tools to do it. And I know that technology is super sexy, and the fintech is technology, but the human element, it's ingrained in our DNA. It's just like, if I were to say tomorrow, all the doctors in the world retire and there's only robo-doctors, would people be comfortable? Even if I could tell you empirically that robo-doctors are even more accurate than human doctors, would people be comfortable? I don't know. I mean, some people would, but most people would say, well, I just need a bit more time to get used to that. Now, there may be a time when AI will take over financial advisory and the person we talk to is a robot to plan our financial well-being, but not now. I don't think it's not today. And that being said, there is this huge pool of resources that can help society. And I'm talking it just from a point of that every person that's looking and that's listening to this YouTube video and seeing Mashir and listening to his podcast about how it can help me in my ordinary day life. Because people are simple. People want to just be happy, want to have enough to survive. I'm sure people want to be more wealthier. Who doesn't? We're all greedy. But so long as I can be happy and moderately successful and I can take care of my family, myself, like I said earlier, it should be enough. And that's where we need to go to with the help of these financial advisors.
Now, you've made a very pertinent point there, right? It's the human touch and why we still see for wealth management for the ultra high net worth being very still high touch in terms of human participation. The second thing, in terms of having the tools for IFAs who've largely been using their own experience or speaking to a few people, so limited knowledge in terms, while with AI and on top of a big data layer gives them more opportunities to present to their clients in the best interest of their clients.
True.
The fiduciary duty. And you've spoken about how AI is also now becoming part of our daily life, right?
That's right.
One of the big hypes we've had over the last year is on Gen AI, while WealthRyse is using neural networks, and it's predictive AI versus Gen AI. So would love, I know it's a slightly more technical piece, but worthwhile for our audience to understand that difference and the maturity of one over the other.
Sure.
In general, right?
Absolutely. I think you hit on a couple of good points, so I could go back to a couple of points that you've mentioned. So first of all, we're targeting obviously the lower high net worth and below. I'm obviously the Jeff Bezos of the world, the Elon Musk. They're going to have private bankers lying down the street. But if Elon and Jeff are watching this video, kudos.
WealthRyse
and
is open for
yes, exactly. We're happy to help. We'll be more than happy to sit on the sidewalk as much as other people. So, but anyway, getting back to your question, I think the point here is that the technology that we use, obviously a lot has been, I guess, trumpeted about Gen AI, about ChatGPT, about them understanding. But you got to realize that you have to have for financial. I mean, if you ask ChatGPT any question, it's more of curiosity. It's more of to educate yourself, and whether it's right or wrong, I think it's not that pertinent. But when you're talking about financial outcomes, even in the regulatory realm, you don't want to falsify or have information that's essentially, hallucinations, which is a big problem with these types of AI tools. So we want to make sure that, first of all, our data is very specialized to finance. Just like if I think, if you want to teach, a robot about medicine, you would want to make sure that medicinal data or data about the human body is much more specialized. That's the first thing. You want to make it up to date as well. The second thing is the fact that because it's a neural network, it actually learns as to what these patterns are. So if I could equate, and I'm just going to make a very rough estimate, because I know I only have a limited amount of time, about how our algorithm works. We can say this. I don't know if people remember AlphaGo. which was the computer that essentially beat a Korean Go player a couple of years back. And what the technology entailed was that AlphaGo was essentially built on a logic that was very old, that is very old, but it's still very effective. And what it did was every single time there was a move that was made, the AlphaGo computer actually calculated back all the different multiverses in terms of how the game would end up based on the move that it would make. And it would then choose the most, the move that had the most probability of success based on an end game. That's what it did. And the reason why AlphaGo was successful was because it had the computing power to compute this within the 2-3 minutes, deadline for each move, or the time period for each move. So it essentially tried to extrapolate the best possible outcome by making the next move. I'm hoping I can explain that correctly. I explained that correctly. Our algorithm, our neural network, essentially, there's an end outcome for a portfolio, whatever the return is on a predictive basis. And it then stipulates and assesses a rebalancing that would most likely, make sure that that outcome, or ensures that that outcome is the most likely one to occur. Sure. And that's the way the neural network works, with the fact that it can also be API driven. Because again, I think the key point here is that we don't want to be in front of everyone. There are always systems, and this is the whole point of being a financial advisor. You want to help a financial advisor, but the financial advisor, what they want is they want that easier way to sell and to persuade and to rebalance to people. Again, I want to use the word sell in a way that's not just selling anything, but really to make sure that the person is valued. And to do that, you have to be the least disruptive. At the same time, you have to make sure that you have the most efficient way possible of doing it. I know it's trying to catch two birds with one stone. It's like eating all you want at a buffet, but then losing 10 pounds after you eat the buffet, which is, again, it could be possible. Who knows with technology? But
chia seeds and
exactly.
Oats, all you can eat.
Exactly. So that's essentially the logic there, is to ensure that possibility of maximizing the predictive return is then shown to the client. But again, when you show it to the client, you want to make sure that it's done in a simplistic way, that the financial advisor, because we don't want to make the financial advisor look unintelligent, nor do we want to make the financial advisor unsure. They want to have a high conviction that this will help the client. And by making it simple and sticking to, essentially, if you rebalance your portfolio, you'll get this return, or this return interval. If you don't, it'll be this return interval. And you're moving them more to the right to ensure that they have a higher return and less possibility of loss. And that's essentially how I think things should be done, because the fact is when you're doing something, you want to think to yourself, I'm doing this because I'm better off by doing it, as opposed to not. And that's essentially what we're trying to make sure we can push. I know it's not a technical answer, Monsieur, but it's human nature. And unfortunately, wealth is very human in a way.
Yeah, I mean, I think it's a key in terms of its predictions, whereas a lot of Gen AI LLMs are used for giving answers on what is, right? Versus future predictions also come, but here it's learning, it's adding. It is not technically, I'm assuming, as heavy when it comes to the technology requirements itself, right? So the other question that kicks in is LLMs and Gen AI needs a lot of computing power.
That's correct.
Right? So when you are serving IFAs or organizations that have a large number of IFAs, that question comes in, is how easy is it to A, integrate with existing systems, but B, how challenging is it in terms of the computing power? And I won't go into the expensive part of it, but just in terms of how complex is it, and is it easy for people to plug in and run and not have too much resources being consumed, and for you guys as well?
Yeah, I think that's the that's the $64,000 question. That's a silver bullet, essentially, is to make it as simple as possible while being as effective as possible. And I think that's the reason why, again, we can do a whole segment or 10 segments on the neural network and the artificial intelligence. And I think that really is something that's interesting, but in the end, does it help or does it solve the problem? I think that's the more important question here.
Correct. Yeah.
And I think that for us, we have to make it simple enough that anyone, my mom, your mom, the generation before us, maybe people that are just getting into wealth management can understand, can be comfortable at knowing what it is, and then going forward with it. Otherwise, you're going to see a lot more. And there's a reason why people are always, and again, I'm not saying this is a bad thing, but cryptocurrency is big. All these single product types of bets are big. And the reason why is that it's simple. People understand. I mean, they're aspiring for that big return, but obviously they also need to understand the loss as well. But I don't think there's a clear balance or view on that. But by making portfolio rebalancing as simple as buying a product, I think that's the operative word here. Then you're able to then usurp and actually mitigate the risk, while at the same time providing a service or a product that's value add that someone else can actually leverage, and to increase the well-being and obviously the utility within society, if that makes sense.
It makes sense. And I want to also understand and get this from you. My understanding of WealthRyse is it's a tool that not only increases the efficiency of a IFA's advice, but it's also enabling prudent decision making for the end investor, the customer.
Right.
In a lot of cases, when we hear of investment tools, the conversation is about, hey, this is going to help increase your portfolio by X percentage, 20, 30, beat the market by 30, 40%.
That's right.
And so just want to hear from you and validate whether that my understanding is correct, but also about distinguishing between a tool that enables you to most efficiently rebalance your portfolio or maintain your portfolio versus a tool which is meant to be a large predictive model for high risk investments or high return investments.
I mean, I think if we could predict the future, that would be the best tool in the world. But unfortunately, we don't have that technology yet, although I'm sure people would want that. I think the key point here, I think, in one of the key issues that we're trying to solve for the financial advisor through the rebalancing is a product, is a service. But in the end game, what do financial advisors really want? They want that engagement with their client. So essentially, it's the ability for them to go every week or every month to come up with something reasonable that their client will be interested in. And again, we've got to trust the financial advisors to know what they know, what's best for their client, right? And that's essentially what WealthRyse is trying to do, is trying to provide that rebalancing on tap, on demand, for that client, for the financial advisor to persuade that client that this is a good idea. Now, will the client always rebalance? No, it won't. And will the client always take the financial advice of that financial advisor? Probably not. But if the financial advisor can get in front of the client every other week or every month, periodically, there's going to be a very good chance that the engagement will happen. And sooner or later, there will be some type of outcome. And it could be an outcome of they're never going to listen to the advice, which is probably highly unlikely. It's probably as highly unlikely as someone listening to the advice all the time. There's always going to be in the middle. And so long as you can engage more times, there's going to be more familiarity. It's like, property buying, right? I mean, there's a property agent calls you every month. And suddenly you're you have to move, or you want to buy property or sell property. Then you call that guy. You won't call a person that's going to call you every 6 months or every year, right? And this is sort of what we're trying to assist in and try to be that co-pilot to be able to drive that engagement, if that makes sense.
Well, that makes total sense. I was just thinking about the joke on the Finternet or financial Twitter, as it were, that whenever Jim Cramer gets into something, you go in the opposite direction because his track record is so good.
Yes.
On calling out things, and it goes on the opposite direction.
True.
So hope that doesn't happen to Bitcoin.
But that's still helpful, right? In some way, right?
No, it's an indicator.
Yeah, it's an indicator one way. Yes.
Yeah, it's just about how you treat the output, right? Jokes aside, now you've entered the market. How are you seeing the reception of such tools in the broader market? I mean, I'm also want to temper this with the fact that we've had the use of technology, but also various forms of smart algos and artificial intelligence in financial management, investment management for decades, right? Millennium Capital, one of the first ones to start deploying it, but there's a whole host of others who have successfully used, and many of the major investment firms now use algos, etc. Right? So that's the technology and the concept per se of using artificial intelligence or smart algos to enable an investment decision is not new. But how are you seeing the reception broadly from the market when it comes to a tool that is enabling financial advisors, and it's a co-pilot. I actually quite like the term of a financial advisor. What's been the general things that you have learned from the market in terms of the need, but also in terms of a receptiveness to it?
I mean, I think first of all, everybody's interested in AI because it's always everywhere,
Correct,
right? But I think that the efficacy is really based on the use cases that are involved. I mean, AI, our AI now is like electricity 130 years ago, right? I mean, when electricity first came out, electricity itself in it was not valuable, but what it did and how it helped, power the Industrial Revolution, to do all of these things was quite paramount and quite significant. So I see AI in that field. That's the reason why I think you said it right. There are a lot of AI tools out there, but do they really have a purpose? Do they serve something that is a pain point that can resolve certain issues? And again, we're still in the very early stages, nascent stages. There's a lot of hype about it. But I think the key point is, can we help this problem, which is essentially that you may have these algos and people have been using for all the time, which you're right, but they've always been very complicated. You had to have a rocket scientist practically, interpreting what they mean. But unfortunately, I don't know about yourself, but I don't know that many rocket scientists, right? And there's still people that can help you, but they also need to have a helping hand in understanding it. And if you're able to simplify it to the point where there's maybe 2,000 different parameters that could be important for the most complicated and most sophisticated hedge fund in the world, but you can make it to the point where it's only the 10 or 15 factors that are the most relevant for the everyday person that really wants to just ensure stability for his or her future and his or her family's future, and wants someone to help him or her. I think that's the difference in terms of how we're using it and the technologies that's there. It's that adoption. And the only way you can adopt it, unfortunately, is if people understand it. And to understand it, you just simplify it. And as you simplify it, people get more acclimated and they get more used to it. And as it becomes part of their journey, then it becomes part of that engagement, which again will build that trust. And that's the key term here when it comes to advisory, right?
Fair. And then you have a very qualified co-founder who has built one of the world's largest asset managers.
Well, we want to say the name, but
a lot of stuff he's done with them, and now bringing that experience is also bringing. I mean, a lot of times about IFAs or financial advice is about experience and knowing those 2,000 parameters, right, and knowing what are the right ones to kind of build for the tool as well is something that's important. I think in financial management, fintech in particular, there's certain things that don't need necessarily deep expertise in finance. But I do believe when it comes to investment management, wealth management, having that experience makes a big difference because you can then make those right choices in terms of the products you want to build or how you structure the product. Right?
True.
How do you see taking this experience that you have with both of you founders and building, this is your second major wealth tech startup that you're building in. What are your predictions in terms of where the market is heading and how this industry is going to evolve over the next 5 to 10 years in parallel to what we're seeing with the growth of Gen AI and LLMs?
I think that first of all, I'm going to state the obvious that obviously AI will take a larger share of the automation.
Correct.
That's going to be done in terms, I'm sure, of data aggregation, data processing, essentially trying to cull the data in a way that's a bit more efficient. So that's obviously going to happen. In terms of AI replacing human financial advisors, I think it's probably unlikely that it's going to happen immediately. It may happen soon, but it's not now. Okay. And so that's why it's important to have this intermediary step for people to be able to access this. Otherwise, there's really no value. I think the way that this will enable, I think AI, what it will do is it'll be the great equalizer. It'll enable people that have an interest but didn't have access to resources to be able to have this knowledge base and to be more educated. And I think that generally speaking, this will enable people to be a lot more literate, and much more informed about things that are going on in a way that's simplified and that they can understand. Because I think that's the way I look at it. Because when people talk about rebalancing, it's like going to the doctor. It's like, I have to do it, but it's not like it's not like the top 10 thing I want to do on my wish list here. And if I can avoid it, I will. I think AI will be able to, and I'm just taking a stab here, make it much more palatable for the consumption of this type of advice to happen. Because again, what did people do before typewriters? They used handwritten notes. After typewriters, they used a computer. After the computer, they used pads and all this other stuff, right? But now it's all about visualization. It's about videos. It's about this 1 minute snippet. It's about these things where you can see them. And this is, I think, the way that when you visualize the delivery through AI, I think that's what's going to change the world. I mean, I don't think people are going to be looking at PDFs anymore. I mean, it's going to be a whole new way of consuming some type of data in a way that's simplified that people understand. And that's, I think, will really change the landscape. And with those tools, again, the financial advisors and the intermediaries and the people that really want to add value to a person's financial journey will be able to do so in a much easier way. I can literally see, and this is not impossible, for there to be, let's say, a 10-person IFA shop that would have probably 30 or 40 relationship managers, but they would not be actual human beings. They would be virtual AI avatars that would deliver the advice that they have in a way that's a bit more palatable. And that's the way I think technology will enable us to expand, encompass, and obviously, ensure the gospel of financial literacy to continue onwards to every person that wants it.
And I think that as an extension, that you could see more loosely using the term democratization of investment advisory to the mass affluent, but just the mass market as well, because you can then build on top the avatars, etc. that you're talking about, which I do. I agree with you. I concur. Probably 3 to 5 year period, maybe earlier. I mean, you already have a bunch of things that are being created,
right?
So it's not a question of whether it can be done. It's a question of how scalable it is at a reasonable cost, right?
True.
It's the same with LLMs. It's been around for a while. It just became that the cost of running them became so much better now because of the quality of data and generally investment.
That's right.
Now everybody has a Chat GPT or a Gemini or whatever, a Copilot, without paying anything, if not much. Right?
That's right.
So which then changes the whole conversation. It could probably be the same as we evolve. David, this has been a very, very interesting conversation. You're very articulate about this subject, which very few people are able to.
Oh, thank you so much. I mean, that means a lot.
Of learning for me.
That means a lot.
So has been a pleasure. Thanks again for running us through that evolution of AI, your entrepreneurship journey, and the future with WealthRyse. Ladies and gentlemen, stay tuned for more such interesting topics and deep dives in the world of Web3, fintech, and world of finance. Like, subscribe, and follow us for more. And once again, thank you, David Lee, co-founder and CEO of WealthRyse.
Thank you so much. Thank you so much. Thank you.
Thanks a lot, David.
Thank you.
Thank you.